Wanted to start just a few minutes early. Um, Little commercial or advertisement. I was working with Lucian the other day, and we uploaded a lot of new videos into the next level library on the options side. And we still have a lot of videos to go that I've already made that go into the futures channel, and then some for the swing trade and strategy in the courses material. But you know, we spend so much time on all the videos that we uploaded for options that we just didn't get to anything else that day. But I think we're going to be trying to do it, like every week or every other week until we finally get caught up. So for the new videos, you'll find them in the next level library under the options trading. They're all over in here. I have new videos on debit spreads, credit spreads. There was some day trading options videos, and then strategies and advanced strategies. Now, if you are not a member of the Bullish Bears, or you don't have access to the next level library because you haven't upgraded, maybe you're thinking, you don't think you need it. These videos that I made, these are not introductory videos. One of the biggest complaints has been that they're too advanced and that people don't understand them. I didn't want to make a bunch of videos that just rehashed the same junk you can get on YouTube when you try to search for options. The same old out of the money 10 delta credit spread junk. These videos are not that. These are very detailed, advanced videos on trading options, delta criteria, trade management, days to expiration, everything that you would need to be able to understand how the trade is constructed, how to manage it, everything. So just wanted to point that out there. Now I'll go ahead and bring in the Zoom crowd. All right. Good morning. Good morning, everybody. We have very little economic events on the table today. Definitely keep your eye on any Fed speakers. Yesterday we had a lot of them. We also had the president speaking, and central bankers from around the world. A lot of different input. But today, once we get through some morning econ, it's a straight shot into the afternoon. So there we go. We got Williams and Waller are going to be speaking today. Two different Fed officials. It doesn't have their date and time, but a little bit of a Google search should be able to highlight that. Yesterday's MOC going into the close was 162/85 on the buy side. Pretty amazing numbers. So not much in the way of econ, which is nice because we want to do a 0 day and we don't want an afternoon economic event to get in the way. So it's an indicator I don't always bring up. It is one of my own personal custom indicators. Um, the one on the bottom is asking a question. It's a very simple question. How far away are we from the 10-day moving average? Markets gravitate to the 10 period moving average. Think of it like bouncing on a trampoline, right? At some point, you get to the highest point of that bounce and you come back down to it, right? Instinctively, you always come back to the trampoline. It's not like you just float off into space. Price does not just go in one direction. It always pulls back. It's a part of the swing high, swing low. It's just what they do, right? Left to its own devices, price will always make that swing high, swing low, swing high, swing low. We're trying to figure out where the apex is, where that's not the word I'm looking for, where the peak is before everything rolls over and comes back down in the other direction. It has nothing to do with the bullish or bearish, because if we were moving to the downside, we would still look at the same measurement. Well, each market has their own rhythm, right? And so you get this general consensus of what the turnaround point is. We're basically asking how far is too far or how fast is too fast. So when a market runs too fast, it'll run away from its own 10 period moving average. When that distance gets too far, it will pause, wait there for the 10 to get caught up, or it will reverse and come back towards the 10. So if you stretch that out on a daily chart and look at where those peaks are, you can kind of get an average for how far a particular market likes to go before it starts that pausing nature. Same thing works on the weekly as well. So right now we're at a 2.7. We're 2.7% away from the 10-day moving average. And you can see if I just stop my mouse that sure, we've gone farther than that before, but we're in the upper edge of that range. If we were to think of it as like an implied volatility indicator with rank, we're in the 70th percentile. So we're in the upper edges of this. And we've already started the rollover. If I start to zoom in here just a little bit, I know it's going to get ugly, but we were at a 4.5. It was a bit extreme. And of course, that's where the pause came in and it let that moving average get caught up with the market. So we've already started the rollover. Now, nothing says that we have to go down into these negative levels. You can see where we've had rollovers before and it just paused. It let the market get caught up with its moving average. And then another swing high, swing low was performed. Right. So this isn't telling us it's going down or up or anything like that. It's just asking how far away from the 10 period moving average are we? So that was the daily. And then here is the weekly. Now, this one obviously is going to be a little bit slower, right? Because it responds on a week to week measurement instead of a day to day measurement. But you can still see there have been times, especially recently, where we've gone higher than our current location. But generally speaking, that's the upper edge. These big mountains back here, well, that was during the whole corona thing. And, you know, the corona just screws up a lot of metrics, a lot of stats, a lot of valuations, right? When we were rallying really good out of the lows of that corona dip, right? So what's the point of bringing up these two indicators? Well, we made some extreme moves in a short period of time. And we always want to be able to quantify or make a statement or get some value out of, have we gone too far, too fast? Markets that move too far too fast become unhealthy. They're just absolutely something you want to be scared of, right? You don't want to get caught in some trap. So when you can look at something like that and see that, yeah, we moved far and we did move really fast, but it's not extreme. Everything's fine. There's nothing to be concerned about, and then good to go, right? And which one of you are doodling all over the screen? Take away your drawing privileges. First, I had to mute you suckers. Now I got to take away your drawing privileges every day. That's nice. Yay. All right. So simple enough concept, right? We don't necessarily need those anymore, other than I want to keep them on for looking at the Nasdaq. So we'll leave them there. They'll take up a little bit of space, but it'll be all right. 45.11 call line yesterday. And we did have a little bit of weakness last night. Kind of dropped us down significantly, but the market did reset and get back above that level. We are up 0.25% on the day, but we have an ADR of over 2.25. So we still have plenty of room to run. We only have, well, we've already burned 12 hours out of the day. So while we do have an ADR of 2.3, we're not likely to make a 2% move from this point going forward unless we get some really good news. And it would not likely be the economic news, because if you come over and see what's on the economic agenda for today, consumer sentiment and pending home sales. You know, the consumer sentiment could add a little bit of juice or a little bit of fire into our market this morning, but it's unlikely to make a 2% move. So if we're going to see a move like that, it's going to have to come from another source of information, either something that one of those Fed speakers say, or maybe some news out of the Ukraine. Either one of those would likely be the only two things that could move this market that far, that fast. So we want to game this out. What's more likely? Step into the higher time frame for a moment and get a better idea of where we're at. We are well outside the box. The Busby performed as it was supposed to, and we are back up to what the Busby owes us. We're free and clear. The next level that we got to worry about is 45.75. And we bring that in, put it on the volume profile. You can see that we're at the top of the box. In fact, we're starting to peak outside of the box. If we were concerned about the volume profile, we would want to look at this and ask, where are we going? Are we moving farther away from the value area, or are we moving closer to the value area? Yeah, Eric, it is available for free because I don't sell indicators. I kind of have this idea that people who sell indicators probably suck at trading and need to make money from selling indicators rather than making money from trading. The indicators that I make are in the Discord that I built that houses all those indicators, which is open to everybody who wants to go in and use it. So all you got to do is join the Bullish Bears, come into our Discord, and you'll get access to that Discord. That Discord that has over 1,000 Thinkorswim indicators in it, charts, studies, watch lists, basically anything that I have either made myself or come across that doesn't have any proprietary material in it. So volume profile. When we look at this, we want to think about, where is the market in relation to the profile? Are we in the box, out of the box? If we're out of the box, which direction is price moving? Towards the box, away from the box? Generally speaking, when we are out of the box, we expect price to go back in. So when we continue to see it not going back in and moving in the other direction, then it is basically coming down to, when what should happen doesn't, that this can catch people unaware. Say anybody who tried to short this market and are now getting squeezed are likely to cause some violent moves when you catch everybody off sides, right? So I want to keep an eye on this through the morning. One thing to be acutely concerned about is when we are gapped up in the Globex and we come into the open near the Globex high. That we've seen this scenario before. We get into the open, we get that first 30-minute pop that tags us into our Globex high again, and then that's the rollover spot, and we spend the rest of the day dumping to the downside, especially on a Friday where maybe people don't want to hold a bunch of stuff going into the weekend. I'm not saying that that's what's going to happen, but I am warning you that we've seen it before and we can absolutely see it again. Yesterday's point of control is a long ways beneath us. We have not yet hit it, so it's an untouched point of control right around the 44.87, 44.88 area. An untouched point of control is not necessarily some, magnet that has to be hit, but we always do want to mark those untouched points of control because if we begin moving back in that direction, that's likely a spot where price will react. Right? So we want to know where that is. This has been our range since early February. It's very likely that we're nearing the end of this move up. 46.11 is kind of the top of the box. In the last week and a half, we've seen the markets move in extraordinary fashion. Just completely rip your face off rally valuations. Now, I'd done a video in the live stream in the Bullish Bears a week or two ago where I taught people how to use the sizzle and go in and evaluate things like the FANG names. Can't stress that enough right now that you want to make sure that we're not in some form of gamma squeeze. Gamma squeeze is basically forcing market makers to buy stock to cover the options that they've traded. The more that we force them to do that, the more stock that they buy, the more they drive price. But it only lasts for a short period of time. And then it's who can get out the fastest. So game it out for this morning. Got the S&P. We got three scenarios. We could stay inside of yesterday's range. At this point, we've already eliminated that scenario. We could break to the upside and continue this rally even higher. We had multiple days now where we've been resting and consolidating and building up the energy to make a new move. So we could absolutely yet again today make another leg up into that 45.60 area. That'd be scenario number 2. Scenario number 3 is that we come back inside of the box and begin challenging the low end of this week's, or at least the last 3 days of range, which would put us right around the 44.50 area. It has to be one of those three, right? There's no other scenarios. So when we approach it from a point of view like this, we have to ask, well, what's more likely? Is it more likely that we break this angled resistance and continue the move to the upside on a Friday after the extraordinary move that we've seen? Personally, I say no. I've been wrong before, especially in this market where everybody piled into the same boat, right? The extreme move that we've seen is a perfect example of what JP Morgan and Goldman Sachs has been crying about for the last 3 years. They've been bitching and moaning and crying like a bunch of children about how retail traders since COVID have come in, and every time a market begins to move, we all pile in there and shove it in just extreme moves. And they don't like it. Wah, right? Let them cry. The funny thing is, before COVID, if you'd have ever heard any of those analysts say that retail traders were moving the market, the guy would have been fired. He would have been fired. He would have been laughed off of Wall Street because we've all heard it a million times. Retail traders don't move the market, that we are insignificant like a raindrop in the ocean. However, that's no longer true. So when you get something like Apple making a good, decent move, and then it just goes nuts and runs to the freaking moon, or Intel yesterday, or Nvidia, it's us, guys. It's us just piling in and piling in and piling in and forcing a short squeeze. So when I look at this today and say, what's more likely? Is the ES going to break that angled resistance and make yet another leg up? Statistically, I would say no. It's very likely going to reject it there, and that we're going to maintain this range from 4,500, which is the Globex low of today, to 45.35, or wherever we happen to reject against that angled resistance. It's a nice 35-point range, nearly a 40-point range, and that, it gets us close to like a 1% move. But it's been extreme lately. So we could break through that angled resistance to the upside. If we were to do that, just take it from our current location. 1% is an S&P average. It's a nice general sweet average. We're already up zero point 0.3. Just add 7 more to it. Give us a 1% move. That'd be 45.60. That's the upside target if we happen to break that angled resistance. So that gets us to the upside. What about the downside? Well, that really is simple enough, but let's just look at all the tree branches we're likely to hit on the way down, right? If we were to fall out of this tree, we have the close of yesterday, which we have crisscrossed so many times at this point that it really doesn't have much uh, validity left to it, but we mark it anyways. That'd get us at around 45.16. I'll tell you, it's so close to that cog line. I think you're better off marking the cog line than we are the close. But either way, we'll mark them both. So the close, the cog, the Globex low of today, the lunchtime pivot point of yesterday, which would put us right around 4,500 flat. So I guess it's very close to the Globex low. We'll just combine those. So remember, it's more about a zone than it is a particular line in the sand, right? And I've said this phrase before, but it makes perfect sense. When you're drawing a trend line, don't imagine that you're using a freshly sharpened pencil. Imagine that you're drawing that trend line with a fat, dull crayon, right? It's not a sharp line in the sand that we're focused on. It's more of a little area, a little zone in the market. So the roundy at 4,500, the open of yesterday, which is really close to the 10-day point of control. And I would say that if you get that close to the point of control, it will become gravity itself and bring us to that level. So that would be our downside move if things start to get negative. Out of my own curiosity, I kind of want to know how far away is that? Because we do want to know, are we measuring too far? We don't want to have unrealistic expectations of a target distance. It's only 1.3 from our current location, and we're up 0.3. So we're looking yet again at a 1% move to the downside by the end of the day. If we were to make that move down, right, it would be down 1% on the day. So that fits perfectly. It's exactly what we would expect, 1% on each side. So that's our upside move, our downside move. And then there's the third scenario that we really don't do anything and we just have a sideways, rangy, choppy day. That would use the Globex low and our own current Globex high or whatever high we happen to set before we go into the open. And that range itself would be the range of the day. That would be scenario number 3. Onto the NASDAQ. Again, reacting to some news in the overnight hours. There is a spot in the Globex called the kill zone. I didn't name it. That's just what it's called. That kill zone is between 2 o'clock in the morning and 4 o'clock in the morning. Statistically, price moves more in that little 2-hour window than it does at any other 2-hour period in time throughout the entire day. Right? So it moves bigger there than it does at the open, bigger there than it does in power hour, bigger there than at any other point in the entire trading day. If you go back and look statistically, the biggest moves of the day happen in the kill zone. You don't have to take my word for that either. You can go back to every single day and look at how the market moved between 2 and 4 in the morning and do your own research and validate that statement. Now, there are periods of time where that's not true, right? And since COVID, we've seen many times where the kill zone was just a dud and we didn't get anything out of it. That's fine. The markets don't always do anything, right? What do they say that history doesn't repeat, but it sure does rhyme? Yeah, well, there you go, right? So for today with the NASDAQ, it also has that angled resistance. We want to ask the question, what's more likely? This is a perfect megaphone example. It's where we expect price to continue this level. It actually is building up energy, and it is likely to break out of this. Now, there's no promise in the direction when it comes to these megaphone patterns, but they became popular by a man that developed the strat, and I never remember his damn name, but he uses the phrase price aggregates. That used to drive me nuts every time I'd hear him say that, because it's not what we hear anybody else say, right? We always say price consolidates, it expands, it contracts, not aggregates. Just absolutely drove me nuts. Doesn't matter. The strat focuses on this exact situation. And the creator of the strat, if you've ever watched some of his videos or webinars or presentations, he talks about this in detail and the outcome of this. And believe it or not, this pattern is not rare. It's really, really, really common. You'll see it everywhere. This pattern is why when we are pivot point trading, that we don't set our entries right at the pivot point. We always set our entries a little beyond the pivot point because that's where all the liquidity is at. So what's more likely, that we break to the upside through this angular resistance and make from here a 2% move, or that we come back down inside the box? My own personal point of view, that we would not break through this level and continue a move to the upside at this point, because it's Friday. We've already had really good moves on the week. We've broken through some long-term resistance that's been kind of holding us back. We're outside of this really big box that we've been in since February. So no, I don't expect it today to break through that upper resistance. But since everything else that we've been talking about and everybody piling in, and it's just being that kind of market, we absolutely could. So that's scenario number one. We break to the upside, we get past 14,900, the overhead roundie, and we make some of this average daily range, which is a 3% daily range. We're only up a half of a percent. That means we could move 2.5% more, and it wouldn't even be considered unusual, except that we've already given away 12 hours of the day. We don't have much time left. In the amount of time that we have left, I find it unrealistic we'd make a 2.5% move unless some really, really extreme news comes in. And it would have to be super positive news to give us that kind of boost. However, keep in mind that the NASDAQ is a representation of a basket of companies. And this isn't the NASDAQ, this is the NASDAQ futures. So this is asking the question, where do you think we're going to be at the end of June? Because this is the forward future point of view of the NASDAQ itself. Well, we don't have to assume that we know the answer to that. We can see what the market's been pricing in. Come on, Thinkorswim. What, I break you? You bum. So 15,700 by March 2023. Seems pretty extreme, doesn't it? Oh yeah, that is contango in its finest. By December, we're looking at 14,885. Now September to December seems, basically flat. If we were to ask, what did the market think even a week ago? So from March 25, we'll just ask about March 18. Yeah, not much there. It's only showing 2 series though. Let's try 5. It doesn't want to do all series. So I guess that's all we got, June and September. Doesn't really provide as much context as I was hoping it would provide. The slices only give us a little. So forward future valuation. Let's take this road out to the daily and ask that same question that we asked in the S&P. How far away are we from the 10-week moving average? And are we in line with that average? The year at least. So we have not yet moved as extreme as we have in the last 3 swing low, swing highs. So we got plenty of room to go in the Nasdaq. It kind of completes the argument that we could break to the upside through that angled resistance. This says we could. This absolutely says that we could. At least looking at the weekly measure, from the daily measure, asking the same question: how far away are we from the 10? We are in the upper extreme edges, right? This March 18 high was almost the highest point in a 2-year chart, right? So we got that far away in the last 2 weeks since the 18th. One period of time that we moved a little farther than that when it was the 50 crossover from last year, or maybe even 2 years back. Yeah, from April. So coming out of those Corona lows, it was the last time we seen the Nasdaq move that extreme, that far, that fast in such a short period of time. But notice it's declining. That we've rolled over since then. Now that doesn't mean the price is declining, right? It doesn't mean the price is moving back towards that 10. All price has to do for this indicator to start to drop is stay still and let the 10 period moving average come up to it, right? Because every day that goes by, if the market's not moving at all, then the 10 period is going to get closer and closer until it's caught back up with the market. So again, it's just asking a very simple question: how far away are we from that 10 period daily moving average? So now that we've taken a look at that, we don't need those darn things anymore. We can get them out of the way. Yeah, I got some chart space again. Takes up a lot of real estate. So that is the upside question. Scenario number one, which I find to be the most unlikely out of the three. The next scenario would be that we perhaps don't do anything and that we just stay within our own Globex low, right around that roundy of 14,700 to our Globex high, whatever that high may be as we come into the open, which is still another hour and a half away. And that would be our range for the day. That is the one that I find most likely out of all three scenarios. The third scenario would be that we get past the close, we get past our own Globex low, the close being the quarter 14,775. I know that's not exactly perfect spot on, but that would be the place that I would focus on. So the close, the Globex low, which is the roundy at 14,700. Again, not exact, but close enough, and it's what I would focus on. And if we happen to get through both of those, then back inside the range that we've been holding for the last few days, Tuesday, Wednesday, and Thursday's price action, we would be back inside the box. I think it would take an extreme bit of news to drive us that low, especially with the numbers that we saw, those econ numbers that came out yesterday. Man, those are really good numbers. And it validates everything that the Fed is saying. The Fed keeps saying we can get as aggressive as we want. We can be as hawkish as we want. We're not going to break the economy. The economy is so strong. It's got so much power and it's so much strength right now that we can raise rates and we don't have to worry about crippling the economy. Okay. Market seemed to like it. Everybody calmed down and got really excited. So, I ain't saying it. They're saying it. The numbers yesterday backed up that statement. So we do want to keep our eye on what the Fed is talking about today. Remember, we do have Fed speakers today. We want to know where they are. I don't know, or I would certainly give you that data now. We want to know where they are, when they're going to be speaking. And if you just watch FX Street, or not FX Street, but Finance Juice, then when they do begin speaking, you'll know. But in my point of view, that's a little too late, right? You don't want to find out that they're speaking when you start to see the reaction from the market and then find it on Finance Juice. So I don't know. Google it, hunt for it. Bloomberg may already have a list of it. Get it somewhere, right? Um, if I find it, I will post it into the Discord. Or if one of you have already found it, you could post it into the Discord and I'll tell everybody during the live stream when they're scheduled to talk, right? Speaking of scheduled to talk, check to make sure that the president isn't going to make any other uh, announcements today that he's not going to be speaking somewhere. It's a little too early in the morning to try this, but it's always worth a try. There is a bot command that you can use. So if you go to Trader's Resource Zone, look for, oh, that's not the spot, a bot corner, go to bot commands, give the command, exclamation point, president. And if it's not too early in the day, we'll get his schedule, which can often highlight when there's going to be, when Jen Psaki is going to come out and have a White House uh, press briefing, or if the president is scheduled to talk. It says no data, so it's very likely that he's traveling back from the European tour and not likely to have a meeting, or it could just be too early in the morning. Try that command a little later in the day, see what you get out of it. We do have pinned messages in the upper right corner of the Discord. You can see the little pin icon. So when you're in that channel where you can give bot commands, I do believe that there are pinned messages up there that can remind you or teach you or show you what those commands happen to be. Um, some some bots do provide some amazing resources, but they're likely lagged because I don't think that we have any paid for bots. Obviously, if you have a paid for bot, you're going to get better information, right? But I don't think that we have any that are paid for. All right, so we're looking at the S&P 500. We want to change it to pre-market percent. We want to use the filter. We don't want 500 names. We only want 100 names, but it doesn't offer me 100, so I have to use the filter. It's hard to get 100, so just kind of get close. Um, Something like around 112 would be fine for me if I can hit it again. There it is. Tricky little bugger. The color scheme here will stay gray unless we get to 0 0.5 or negative 0 0.5. So we want to change the color scheme. We can do that just by hitting where it says 1x and drop it from a whole number of -3 to +3 and go to tenths, right? So we just change the multiplier. This gives us a more responsive color scheme, and you can see that we are in a risk-on situation. You can easily see the fangs here, right? We've got Microsoft, Google, Apple, Nvidia, Netflix. And if you want to have Fangman plus T, then we've got Tesla too. So the fangs are looking really good this morning. They are the drivers of the market, right? This is why your market breadth hasn't been very accurate in the last few days. The market breadth can say that we have 80% of the S&P going down, but as long as we have the fangs going up, well, the market's going to go up. Right? So keep your eye on the fangs. They are one of the best indicators that you can use as a day trader. So when we're looking at this screen, we want to just kind of get a feel for the market. It takes seconds, and that's what it's designed to do, right? Give you an overview of the market in moments. So you look at it, we're in a risk on marketplace, and you can start to get a feel for where there is a little bit of weakness. Energy minerals, for an example, it's not necessarily down, right? It's only slightly down. It's more weak than down. Or finance, we can see that there's some gray in there. So slightly flat. Gray is showing that there's just not been enough movement there to even change its color scheme. So kind of a mixed bag of goods when it comes to the financials. The moves that we saw in the dollar yesterday were so violent and so extreme and so extraordinary. It was absolutely amazing. And when that dollar quit moving, our market quit moving. When it consolidated, we consolidated. And who took the brunt of all of that? Finance. Between the bonds and the dollar making exaggerated moves, finance is the name of the game. Energy yesterday was also pretty significant, and it's been this little tag team between finance and energy. It's been that way for the last 6 to 8 weeks. And speaking of finance and energy, they were highly correlated last year. I know it just kind of seems odd to present that, but energy and finance last year, right? Those were one hell of a pair group. Change this one to the NASDAQ 100. We don't need to use a filter here, but we want to set it to pre-market change percent, give it a color scheme adjustment. We are in a risk on marketplace. There is a little bit of shades of gray. So if we were to come into technology services, we got, quite a few names in there: Inuit Software, uh, PayX. So, there is some weakness. Back out of that one. And the other one is health technology. That's not what I wanted. Ah, kind of flat in there and negative in there, right? So, stock screener. It's kind of my own little sweetheart right here. This is where I like to ask the question, give it actual valuated numbers. How bullish are we? How bearish are we? So, from this place, this is where I like to come in and ask that question by using the little screeners you put together. Why my filters aren't set up the way that they normally are. We'll just get rid of it and bring in a different one. So we want to ask the question, since we've seen all that green market, how many names in the S&P are up at least a half of a percent? Only 11. So it may have looked really bullish, but that's not bullish, right? Because if it's not up at least a half of a percent, then, it's barely up at all. The names that we are looking at here, though: Facebook, Netflix, Google, internet software and services, technology services, process and industries. So in the S&P, we have financial names, and in the Nasdaq 100, we don't have financial names. So we're sitting here looking at the S&P, and all the names that are up at least a half of a percent, none of them are financials. So ask the same question out of the Nasdaq. How many names in the Nasdaq are up at least a half of a percent this morning? Only 15. Again, not overly bullish. Doesn't inspire, you know, yeah, it doesn't inspire. Just say it that way. Chips are up. Electronic technology is the play of the day. Multiple names in here, chip names. So it definitely stands out. Chips may be the play. A couple of other big names though. Um, those big names are easily monitored in that ETF IGV. It's what I've been using for big tech. Still, nothing really standing out here. So we need to evaluate the sectors this morning. I found the easiest way to do that is to use TrendSpider, only because Thinkorswim does such a piss poor job of showing change percent before the market opens. Now, once the market opens, Thinkorswim does a really good job of doing that kind of work. But before they open, if you want to see change percent on Thinkorswim, you have to use a custom modified indicator. And a lot of you don't know how to code Thinkorswim, so then you're gonna download and import and hope it works. And sometimes it doesn't, then it's broke, and then you don't know how to fix it. But if you go to something like TrendSpider, you don't have to do any kind of coding. There's nothing magical about TrendSpider. It does a really good job of in the pre-market showing this change percent. TradingView does just as good, but TradingView is limited on the watch lists that you can apply, and on TrendSpider that's not true. TrendSpider's also got unusual options activity, analyst upgrades and downgrades, all packaged into that sidebar. All kinds of really amazing features. When I was new and trying to learn the different ways of drawing trend lines, this was a very useful, valuable tool. I outgrew that along the way, but still, it also does multiple time frame evaluation, and you can set alerts near a line. I absolutely love that feature. Before I started using that feature, price would often miss my alert by like 2 or 3 pennies. And of course, I wouldn't get the alert, but damn, it was close enough. That would have been a good trade. Now you can just use something like TrendSpider, set an alert near the line that you're worried about. It'll notify you and give you that heads up. I love it. It's absolutely awesome. They also have a lot of educational content to show you how to use their program, which to me is important since, I'm constantly making educational content of my own. So knowing that I'm using their product the way that they were intended it to be used and that they are willing to teach me how to use it so I can use it effectively, it's one of the reasons I like TrendSpider. No, they don't pay me to say any of that. I just like the damn thing. It's useful. It's valuable. So looking at the sectors this morning, start with what's down since we're bullish. Uh, Oil is down. Emerging markets are down. Now, emerging markets is concerning to see that down because that's usually our risk on for a global concept. We want to know where that global money is going. To see that down doesn't inspire again, right? It just doesn't inspire. If we're bullish, that's up. So we're not bullish because that ain't up. It's really that easy, right? And then look at the top names to the downside this morning. XLE, energy. XOP, energy. USO, energy. Then we've got gold. Then we start getting into the names that are basically flat. And we start peeking our head up out of the other side. We need to be up at least 0.5% to consider it up on the day. We got Bitcoin at 1.5%. It's not bad. We look at this range here on the daily chart. You can see that we're nearing the top of that range. If we were to look at it on, say, a weekly chart and look at that range, it would present more of a flag opportunity. And of course, if you break in the opposite direction of the flag, then it's a failed flag, and that's a trade strategy. It's a fully formed trade system. We'd look for, key signals, and we're not going to worry about that today. We are back above the 50. We did get through all of the moving average clusters. We are extended quite a ways past the 10, and we're coming into an area of resistance. So we're very likely going to see a rejection here. Of course, there's always that phrase, when the markets do what it shouldn't do. So if we're all looking at this thinking that it's going to reject there and it doesn't, the squeeze that would ensue is likely to finally break through that 30 level and get us back up into the 31, 32 area. It'd be one hell of a squeeze. Cloud computing is also up this morning. And then the pot stocks or pot sector is up this morning. Everything else is midline to flat, slightly weak, slightly positive. Not a whole lot of excitement there. So one of the problems with legacy S&P sectors is that they do not have some of our more modern sector needs, right? EV markets, for an example. There's not an S&P EV market that is popular for an ETF. Not yet. Give them time. They'll make a good one, but we just don't have one yet. So when we run into a situation like that, I go out and I get the EV names and I put them all into a single watch list, consider them a basket of stocks that we can use for our own EV sector, right? EV being electric vehicles. So now that we've got that basket of stocks, we can look at them in the aggregate and ask, how's the EV market this morning? How are electric vehicles doing? It's kind of a mixed bag. Some are good, some are bad, but there's some deep moves to the downside. NIO nearly down 5%. XPEV not far behind it, more than 4.5% to the downside, and Li Auto. So those three are kind of my go-tos that I like to trade. But in that same basket, we've got Ford and GM, more of your classic legacy names, and Tesla up at a 0.5%. Ride is up 1.25. So, we got some really good names, some really bad names. I would say Tesla is your dominant market. So it's likely to lead, When we're trading anything on the intraday, you don't want to just stare at that one market. If I was trading NIO, for an example, I wouldn't just watch NIO. I would watch NIO and Tesla and maybe Lee or Ride. I would look at its peers because they're going to give me clues about what's going on in the trade that I'm taking. So if you're looking at the EV market this morning, either Tesla's going to get caught up with its peers, meaning it's going to go down a good 2 to 3%, or its peers are going to turn around and get caught up with Tesla, meaning they're going to at least try to reclaim some of these 5% moves from that downside fade. One side or the other is going to get caught up, right? You don't have to assume which one. Just start looking for clues and run it in that direction. So the EV market is one of those sectors. Crypto is another sector. The S&P sectors, there's 11 of them. We don't have a crypto sector. Make our own. The names on this list come from Tastyworks. They have a crypto futures product. And of course, futures are yet again another basket of stocks. So we opened up that futures crypto product and we asked, hey, what's in this thing? Took all the names out of it, built a watch list from it. That's where this crypto list comes from. So you'll see it's not a list of crypto names. It's not Bitcoin and Litecoin and all that stuff. It's companies that are heavily vested in crypto and or blockchain. So some of the names may surprise you. PayPal, Square, Nvidia, AMD, Taiwan Semiconductors. They may not be the first thing you think of when it comes to crypto. They're all looking relatively strong this morning. There are a few names that are weak, some heavily beaten down, like Can is down 4%. So there are a few that are down significantly, but for the most part, they're looking really good. MARA is up over 2.5. Even Coin is up more than 1.25, right? So we got some pretty good names moving around in there. And we have that same structure. There's the flag. If we were to break out of the top of this bear flag, which is very likely, then we'll start the reciprocation process of running things back up to that 800 level. We did get back above the 50. We got through the cluster of moving averages. And on the morning, this morning, we're breaking out of that major level. That was a beautiful hammer reversal yesterday, too. So it's looking really good on the crypto scene. It's a nice way to say it. We know the pot stocks are doing good because we do have that MJ ETF, but that MJ ETF, I found that to be kind of lacking in nature. So built the watch list, same concept, same idea. Gathered up a list of pot stock names. SNDL up over 18%, just 18 and a half. That's absolutely phenomenal move. When we start to zoom out though and put it in a little bit of context, we start to see this as a really beautiful reversal opportunity. And it's also a really cheap name. Surprisingly enough, this has options. I haven't traded them this year, but last year we were trading SNDL options frequently. And it has enough volatility that even on the sell side, this is a great product to learn how to do things like the wheel. From one perspective, you're not going to get hurt that bad if you screw it up. But just from the other point of view, it had really liquid options. And it's just a nice product that even small accounts can get familiar with the strategy, right? So we sell puts to get stock and we sell calls to get rid of stock. Just a really, really generic, quick rundown on the wheel strategy. You would sell a put, say you sold the $1 strike put. You sell it for $45. Somewhere between now and the next 210 days, that thing depreciates in value. You buy it back cheaper. If the market doesn't get above that strike and you end up getting assigned the stock, hey, yay, you own 100 shares of stock at $1 a piece. And you can now, at that point, turn around and start selling calls against the stock that you own. Now, this is a really, really cheap company. It's beaten down in its sector. This is not a representation of a really great company that you would want to, invest heavily in a wheel strategy. But learning how the wheel strategy works, learning how these options decay, participating in a market this cheap, you're not going to get significantly hurt if you screw it all up, right? Just trade one option, just one. You don't have to go in there and get like 70 of the damn things. If I was to do this, what would the risk be? Well, we're talking about buying stock at $1 a share. Max loss, $55. So you could sell a put and you would need a buying power that can cover, around $40, $50. Right? We can see how it's got the buying power in there. Now, I'm not saying that this is something you should just run out and start doing today in SNDL. We're talking about how to perform the wheel strategy and learning how to do that strategy in a live market rather than paper, actually participating in something that you've got skin in the game, even if it's just a couple of bucks, right? Learn how to do it on this market and then size up once you know how to do it comfortably and go get into a real market, right? Tilray is another one up 17% this morning. This is kind of a small cup. I'd be asking, like, hey, where's the handle on this thing? We are significantly above our moving averages in this. We did make it through an area of resistance and we got a clear path to $10. My concern at this point would be that we moved really far, really fast, and I would be expecting a pause or a consolidation. I'd be expecting to see a bit of a flag here, right? Some kind of a pullback like a Busby, bringing us back down to around $7.50. Someone asked a question about sectors the other day. TD Ameritrade on their website has a really cool tool that you can use to evaluate the sectors. Come on, you can do it. Well, while we wait for that thing, we come over and the other part of this sector discussion. Thinkorswim has pre-built watch lists that have the sectors in it. You don't have to create the list; it already has one. Now you could create your own, and then you can fill it up with whatever you want. But if you want the S&P sectors, those legacy 11 sectors in the public watch list on Thinkorswim, there's your sectors. So you don't have to make your own. It already has one. Once you've got it, you can add custom watch list columns and you can check relative strength. These relative strength columns I have shared. They are in the Discord we were talking about earlier. So we got a 5-day, a 10, a 21, and a 42-day of relative strength. We can apply those to the sectors and get an idea of what's been going on over the last 42 days. Now think of 42 days as 2 months. Once you sort those out, you can see how the market has changed, kind of get an idea of what's getting weaker, what's getting stronger. Once you apply that and you've got your market maker move and then your average daily range, start bringing in the squeeze, check the trend, check for price action. You've got a really good perspective of the overall aggregate market. These sectors are the are the drivers, right? If we're going to see that bullish move in the market, for an example, that we were talking about earlier in the ES and the NASDAQ, well, it can't do that by itself. It's going to be driven either by the FANG names or by finance or just, tech and finance. It's always one of those two, tech, finance. So keeping your eye on those sectors through the day provides you that context. So let's see if Thinkorswim is finally loaded on the website. The heck got a little box like that for? All right, so once you're on TD Ameritrade, go to Research and Ideas, go to Markets, scroll down, looking at the left side. No, we got to do one more thing. On the left side, you got Sectors and Industries. And click on that, and you see this TD Market Monitor. This little thing right there. If you were to click on this, it'll bring up a tool. Now the market's closed, right? So the tool's only going to give us so much. And you can filter things out. Top gainers, top losers, most active companies. Sure, you can do it that way. But you can also just go in and change your time frame too. So if you wanted to look at the last 30 days or after the market opens, you can look at today's. So in the last 30 days or the last 3 months, say we look at communications, which has been weak but is starting to turn back around. Click on, say, entertainment, it opens it up even more. We can see the names that make up entertainment, and it's Activision that's moving around in there that's bringing this sector back. But we can see wireless is also moving around in there. The only name in the list, T-Mobile. But you can see how it leads you down the rabbit hole and allows you to hone in on what name in that sector, in that industry, is making moves. We can see that energy is the brightest name in the list. It's up 41.82% over the last 3 months. We can break energy down into oil and gas and fuel or energy equipment. Both of those are up a lot. And then, of course, I know these are hard to see in the live stream. White writing in a really bright green background. You probably can't see any of these, but if you were to go there on your own and look at it, you'd be able to see it better. Right? But there's our list of companies that we could focus on that led us down the path just by using this tool. It's a really powerful tool. This can help you do a little bit of research on, capital rotation, money moving in and out of the market, and it's free, right? As long as you got an account. But even without using that tool, it does have the legacy sectors here, and you can set this back 1 week, 1 month. So if we look at the 1 week, what's been happening this morning, what's been happening on the week, real estate and utilities are the worst performing, and consumer discretionary and information technology are the two strongest performing, even doing better than energy this week. CFRA does a report that's worth reading. It's pretty useful. I've said it before that most brokers, Thinkorswim, Schwab, Fidelity, E-Trade, they're all going to have some tool similar to this. They're going to provide a pre-market perspective. They're going to provide an end of the day perspective. They're just a really useful tools on their broker website, not necessarily in their trading toolbox, right? Like TD Ameritrade on the website, as opposed to, say, Thinkorswim, the tool. Schwab has a really good sector tool, by the way, just for an example. It's different than this one, but still a really, really good, really powerful sector tool. There is nobody scheduled to stream today in the bullish bears in any of the channels, pennies, futures, large caps. Nobody's scheduled to stream anywhere. I will be streaming, however, even though I'm not on the schedule to stream. That'll start around 9:15. I'm going to use the large caps chat room for that stream. We're going to cover futures, just as much as we do stocks. So, if you're trading futures, you want to come in into the large caps and hang out, we'd be glad to have you. And otherwise, guys, I will see you all there.